Okay, you guys, we're going to go ahead and start. I hope everybody can hear me. Hope everybody's getting ready for the holiday coming up on Thursday. We hope that you guys eat good and spend time with family. We're going to go ahead and jump in and start here. So tonight what we're going to be going over is we're going to be going over three things. We're going to be going over the tax law changes for 2020. We're also going to be going over a tutorial that we have, Dave, I'm going to say Dave, has developed for you guys to give you guys some training materials. Everybody always wants training materials. Nobody ever wants to pay for it. So we have created some training that you guys can do on your own. If you have offices, you guys can incorporate this training into your offices. And then we're also going to go over the proper interviews to take for your taxpayer to ensure that you're doing your due diligence as a pay preparer. So we're going to go ahead and start. Remember, if you guys have questions, please type them in the questions box. Dave is going to be on the questions, so we'll be answering them as quickly as possible. If they're relevant, I'll stop and we'll answer them together. So let's go ahead and start. All right, so the Form 1040, what has changed on the Form 1040 this year is going to be the 1040 form has been updated. The income is now on page 1, and the signature is moved to page 2. There's a new line 6 is added to report capital gain or loss. I know that one of our affiliates that are on here, he's always reporting capital gain or loss, so this is going to be information for him to use here. The subsequent lines under line 6 have been renumbered. The full year health coverage or exempt questionnaire box is going to be eliminated from the 1040 because there is no penalty for not having insurance for this tax year. The number of associated schedules has been reduced from 6 to 3 as well. Now, other forms that have changed. The 2020 Form W-4, which is what you fill out when you start a job. When you start a job, they give you the tax papers to fill out. W-4 is for your federal income tax withholding. It has been redesigned and is no longer going to use the concept of withholding allowances. Instead, what they've done is they have replaced those complicated worksheets that no one knows how to figure out or fill out properly to more straightforward questions to make accurate withholding easier for employees. Employees who have already submitted W-4s in the past, you do not have to go back and do a new one. However, if you think that you may have done it wrong, I'd suggest getting your hands on a copy of the new W-4, as they are very much easier for you to understand and know what's being taken out of your check and why. The employers will continue to compute withholding based on the information from the most recent submitted W-4. So if you don't fill out a new one, they're going to keep doing what they've been doing. The same amount is going to keep coming out. It's not going to be any more or any less. And the entry spaces on the 2019 tax forms are shown for dollar amounts only, no cents. The Schedule CEZ on the 1040 form and the Form 255 EZ have been made obsolete for tax year 2019 and future tax years. Form 8965, health coverage exemptions and exceptions have also been removed. Because, like I said, there's no exemptions, no penalties for not having insurance, so there's no need for that form to be there. The Schedule CEZ is also gone. So the 1040 SR is required. It is the income tax return for seniors. It's available for tax year 2019. It may be used by taxpayers who are 65 or older at the end of the tax year. If married filing jointly, one of those taxpayers have to be 65 or older. The form has increased font size and includes a standard deduction chart. Okay, I-10s. The I-10s that have not been used in the last 3 consecutive years. So if you have someone that has not used their I-10 in the past 3 years at one point, so even if they used it 2.5 years ago, they're good. But if they have not used it within the last 3 years, then it will expire on December 31st, 2019. If they are trying to file a tax return, they're going to have to apply again. The best thing to do is go ahead and renew it now. If you know someone that files with an I-10 that hasn't filed or you haven't saw in your office, make sure that you try to get in touch with them to get them back in. That way you don't lose a client. Also, I-10s with the middle digits 83, 84, 85, 86, and 87 are going to expire in 2019, so make sure that these taxpayers need to take action to renew it if they're going to use their I-10 on their 2020 tax return. Alimony. Alimony for any divorced or separated person that's going to be executed after December 31st, 2018. So that means if you received alimony or you were required to pay alimony after December 31st of 2018, the alimony and the separate maintenance payments are no longer deductible by the payor or the spouse. So that means that if you took the deduction for paying alimony, you can't do it anymore. If you took the deduction or if you claimed alimony as income, you cannot do that anymore. Alimony is just going to be gone out of the way. Personal exemptions. The deduction for all personal exemptions is still suspended. That is effective through tax years 2018 through 25. For 2019, the gross income limitation for qualifying relative is going to be $4,200. The standard deduction here. The standard deduction for taxpayers who do not itemize deductions on their 1040, as far as the Schedule A goes, has increased. The standard deduction amount for 2019 are going to be married filing joint or qualifying widow has increased to $24,000. That's an increase of $400. Head of household is going to be $18,350. That's an increase of $350. And single or married filing separate is $12,200, which is an increase of $200. Now, taxpayers who are 65 and older or blind, for 2019, the standard deduction amounts for those taxpayers is going to be single or head of household $1,650, which is an increase of $50. And married taxpayers or qualifying widows is going to be $1,300, which is no change. So, you guys, it was similar last year. Just make sure that if your customers are coming in to do itemized deductions, then the amount that they're itemizing based on their filing status needs to be greater than one of these numbers. You are going to have people that come in and still want to itemize on their federal return simply because it does give some states do benefit by itemizing state returns. So you may have people that still want to itemize, but as far as for the federal goes, it's not going to increase or increase the refund or their tax liability if it's not over these amounts. Okay, a little bit of long-term care premium limits. For 2019, the maximum qualified long-term premiums as medical expenses has increased. Qualified long-term premiums up to the amounts that are going to be listed below can be included as medical expense on the 1040, the Schedule A itemized deductions, or in calculating the self-employed health insurance deduction. So, $420 for the age 40 or under, $790 for age 41 to 50, $1,580 for age 51 to 60, $4,220 for anyone 61 to 70, and $5,270 for anyone 71 and over. The limit on premiums is for each person. Now, as far as itemized deductions on medical expenses, the medical expense deduction threshold is 10% of the adjusted gross income. The lower 7.5% AGI threshold has expired. So last year, the medical expense deduction was 7.5%. This year it has increased to 10% of the adjusted gross income. The health savings accounts deduction for 2019, the annual contribution of limits on deductions for the health savings account for individuals with self-only coverage is $3,500. So it's an increase of $50, and $7,000 for family coverage, which is an increase of $100. There is an additional contribution amount of $1,000 for taxpayers who are age 55 or older. I know a lot of you don't deal with the health savings account, but there's a couple of you in here that do, so this will help you guys. Now, as far as standard mileage goes, for 2019, the following rates are in effect. It's going to be 58 cents per mile for business miles driven. It's going to be 20 cents per mile for medical or moving purposes, and 14 cents per mile in service of charitable organizations. So if you're doing volunteer work and you're driving your car to and from, you're going to get 14 cents per mile. The standard mileage rate for business cannot be used to claim an itemized deduction for unreimbursed employee travel expenses during the suspension of miscellaneous itemized deductions that are subject to the 2% AGI floor. The moving expense deduction is not allowed through 2025, and the exclusion from income of moving expense reimbursement from an employer is also suspended. The only exception is for active duty military who move pursuant to military order to a new station. So remember, no moving expense if it's for your job. You cannot claim that anymore, and your employer cannot get, if they paid for your moving expenses, they cannot count that as income, and through 2025. So we'll see what happens after 2025, but right now it's a no-go. The deduction for qualified business income for 2019, the threshold amount is $321,400 for married filing joint returns and $160,725 for married filing separate returns, and $160,700 for single and head of household returns. Retirement contribution savings credits here. In order to claim this credit, the taxpayer's modified adjusted gross income must not be more than $32,000 for single, must not be more than $48,000 for head of household, which is an increase of $750, and $64,000, which is an increase of $1,000 for married filing joint. The child tax credit, the maximum credit per qualifying child is $2,000. However, the definition of a qualifying child has not changed. The refundable amount for this credit is going to be $1,400 per qualifying child. So the maximum you can get is $2,000. However, $600 of that is not refundable, which means $600 of that is going to lower your tax liability. If your tax liability is already at zero, then that $600 is going to be washed. You can only get back a refundable amount of up to $1,400 per qualifying child. That's the max. The earned income credit for 2019, the maximum credit has increased to $6,557 with 3 or more children, $5,828 with 2 children, $3,526 with 1 child, and $529 with no children. Now, I know a lot of people use these on their marketing material, so here are your numbers that you want to list. Make sure, and I'm just going to say this from personal experience, from calls that we get, don't go out there and advertise. Don't go out there and advertise the deduction is this, the $6,557. If you're going to advertise it, just make sure that you advertise it properly, because then you got people coming back asking why they're not getting $6,000 in earned income credit. So just make sure that you tell them that it is the maximum for each child. Now, to be eligible for a full or partial credit, the taxpayer must have earned income of at least $1, which means they had to have earned it. It can't be unemployment, and it can't be Social Security. So it's got to be less than $50,162 with 3 or more qualifying children. If you're married filing joint, you do get to make $55,952. If you have 2 or more qualifying children, it cannot be over $46,703. If you have 1 qualifying child, it cannot be over $41,094. And if you have no qualifying children, then you cannot have earned over $15,570. Now, the investment income, these are going to be taxpayers who invest, whose investment income was more than $3,600. They are not going to be able to claim earned income credit no matter how much earned income they had. If they have investment income of over $3,600, they will not be eligible for the earned income credit. Now, the education benefits, the American Opportunity Credit for 2019 is going to be gradually reduced or phased out if taxpayers modified adjusted gross income. I'm going crazy here. Okay, if their modified adjusted gross income is between $80,000 and $90,000, or if they're married filing joint and it's $160 through $180. If the taxpayer cannot claim the credit if their modified adjusted gross income is $90,000 or more. So instead of them getting the full amount for the credit, it's going to be reduced down just like the earned income credit. It's going to start going down and down for the more money they make. It's going to be the same thing for the lifetime learning credit. And then for the student loan interest deduction, it's going to begin to phase out as well. And then in 2019, this is the big one. In 2019, you are required to have a 1098 in your hand. If you have a person that comes in and says, I got a 1098, I don't know where it's at, I don't have it, and you try to claim it, it's going to be rejected by the software. The software is not going to let you proceed. It's going to throw a flag, and it's going to say you're required to have it. The IRS is making it standard. There's a lot of fraud that goes on with these 1098-Ts. They have already issued more personnel to audit these returns. So make sure that you're not trying to file any 1090-Ts or any education credits unless you have all of the information available that you need to prove it. Now, the Affordable Care Act, the filing thresholds and federal poverty line tables have been adjusted for inflation. For 2019, again, the shared responsibility payment is 0. Taxpayers who do not have health insurance will not be paying any fines or any penalties, nothing. The IRS has announced that the convertible virtual currency, such as Bitcoin, would be treated as property and not as currency, thus creating immediate tax consequences for those using Bitcoins to pay for goods and services. Yeah, so if you're investing in Bitcoin or your taxpayers investing in Bitcoin, they're going to have to pay tax on it. The Bipartisan Budget Act of 2018 extended the following provisions only through December 2017. They are expired for 2019. Exclusion from gross income of qualified principal residence indebtedness. The mortgage insurance premiums deductible as a qualified residence interest. And the deduction for qualified tuition and fees. The credit for non-business energy property residential energy credit. These are all gone. You guys see that? The deduction for qualified tuition and fees. Gone. Gone. 1098-T is the only way you're getting anything. Now, some more interesting statistics that we're going to go over. So, according to the IRS statistics for 2017, the last year before the TCJA, which is the Tax Cut Jobs Act, 68.4% of taxpayers filed the Form 1040 claiming the standard deduction. 31.6% of the taxpayers filed the 1040 by itemizing. Now, just in the first year of the Tax Cuts Jobs Act, it's going to tell us that 90% of all taxpayers filed the 1040 claiming the standard deduction, and only 10% of taxpayers itemized their returns this year. So that amount decreased by almost 20%. So that's how many itemized deductions went away and how much the standard deduction, which makes your job easier, increased. Now we have some more interesting statistics right here. Through October 18, 2019, these are the numbers that are based. The numbers are going to speak for themselves. After the Tax Cuts Jobs Act was introduced, the amount of returns itemized, of course, went down drastically. So there's a 2-year comparison right here. If you see in the filing year 2000, every time I go to the screen, it doesn't want me to show you guys these numbers. Hold on a second. Okay, here we go. So I'm going to show you like this because it keeps Xing me out of it. So filing year 2018, the total 1040 electronic filed returns was this amount. 2019, it increased. The difference was 712,000. So the e-file tax returns that were prepared by professionals like us, like yourself, in 2018, it was 79,990,000. In 2019, it was 80,294,000, which is an increase of 304,000 tax returns. That means that 304,000 people decided to go out and let somebody else prepare their tax returns. That's what we like to see, and that's what we want to keep seeing because there's more food on the table for us to eat. So we want to make sure that we're marketing, advertising, and trying to get these customers because we do expect that it's going to grow again this year, that we get those customers to each and every one of you. So the total electronic filed returns claiming itemized deductions was 93,813,000 in 2018. Well, in 2019, it went down to 13,786,600, which is a difference of 80,026,400 returns. So that means that just in 1 year, 80 million people went from itemizing to standard deductions. Now, the total e-file returns by tax professionals that were claiming itemized deductions in 2018 was 54,713,000. Well, 2019, it went down to 8,029,400, which is a 46,683,000 difference. Okay, so listen, that means that 46 million people itemized, went to the standard deduction. They itemized in 2018, but went to their standard deduction in 2019, which means your job was made simpler. That means less audits on your clients and less work that you're having to do. So that is really all of the tax laws that have updated this year. Anybody got any questions about any of the tax laws? Anything that I need to answer before we go on to the intake interview? Anybody? All right, so what we're going to do is we're going to go into the intake interview training. So you guys are going to receive this, like I said, everybody that has done their onboarding and completed their onboarding documents for this upcoming season, you are going to be able to get the PDF of this. We will start sending it out tomorrow afternoon. So we're going to touch on this. We're not going to go over every single thing in detail like we did the tax laws, but we're going to touch on it. I'm going to let you guys know what it is. This is really good information for anybody that's going to work with you or the people that's got offices that have employees. Make sure that you make them learn it. Make sure that you make them do it. This is going to protect you and them and the taxpayer. So the objectives of this training are going to be, at the end of this, you're going to be able to describe the purpose of following a consistent intake and interview process, the basic steps to complete the intake process, and the basic steps on to complete the interview process. So this is going to be questions that you're supposed to, and steps you're supposed to do to ensure that you're filing a diligent return in the IRS's eyes. That way, if you're selected for a prepare audit, you are prepared, you're not fined, and the IRS will leave you alone. The purpose of this training is the Internal Revenue Service continues to emphasize the positive correlation between the proper use of the intake interview process and the preparation of an accurate tax return. The IRS oversight reviews indicate that consistent use of complete intake, interview, and quality review processes result in more accurate returns. When properly used, the accuracy of returns has increased. So when you stick to these rules and these steps, your accuracy rate of preparing proper, correct tax returns with no audits, no flags, increases. And that means that you're going to have less chances of stuff not funding, less chances of ID verifies, everything is going to look right, the IRS is going to leave you and your clients alone, and that's what we need. Okay, so it's mandatory that intake forms are completed for each tax return prepared regardless. If you have your EFIN, if you don't have your EFIN, you should still always have intake forms. The intake process, completing forms, there's methods for completing intake forms. They can vary from site to site. No one's going to do it the same. However, the preparer needs to discuss all of the provided taxpayer information. Some sites prefer that taxpayers complete the intake forms with the taxpayer while they're doing the interview. So some people say, fill out this form while we're going through it. Or some preparers fill it out as they're asking the questions for them. And then some offices say, no, you do it. And once you complete the paperwork, then I'll take you back. It doesn't matter how you do it. The only thing that matters is that it's done and that it's signed by the taxpayer and that you know, or at least you have a gut feeling that it's right. Verifying their identity is going to be key. Identity theft is a nationwide problem. We all know that. The interview should begin by requiring a valid photo ID. Photo IDs are going to be required for any return e-filed. So if it's a bank product or a non-bank product, the software is going to ask you for the valid ID. Then the software's got a box in there that's going to say, to verify that you have verified that that ID is that taxpayer and that ID is valid. So the interview process, don't begin entering any taxpayer information into the software until you have completed a thorough interview with the taxpayer, because you can find out at any point in the interview process that the taxpayer does not have all the information needed. So this is going to save time for you and the taxpayers, and it's going to make, frustration at a low. So what we do, and what I've always done, I worked in retail tax preparation for 12 years. What I always did was have my clipboard ready out with the intake forms. When I went to grab the clipboard before I grabbed my next customer, I would go ahead and flip through everything. I would make sure that everything was there. If anything was missing, I would go ahead and tell them then before we ever got back to the back. Because once they get to your desk, then they're going to get frustrated. So just make sure that you're making sure you have all of your documentation before you start the process. You should update or correct the intake sheet with any changes identified during the interview with the taxpayer, of course. Clarifying information while reviewing intake forms during the interview is a very effective way to gather all the information needed. For example, you mark that no one else lives in your home. Is that correct? Is your pension your only source of income? So then be on the lookout for conflicting information. Be alert. Sometimes an entry on one part will raise a question on another part. So, for example, I see that you and your husband both work, yet you did not indicate you paid any child care expenses for your 3-year-old son. I see that you answered no to the question, can anyone claim you on their tax return? But since you're a student living with your parents, I'm wondering if they can claim you on their tax return. So that's a good way to make sure that a return is not rejected because their parents already claimed them on the tax return. Make sure that you're making notes on the intake packet at all times. Anything that you think is crucial, you want to make sure that you are answering on that intake packet. You want to make sure that you are writing those notes down. You're signing it. You're making your customer sign it or fix anything that's going on. Verify that the information on the intake forms is correct and complete. Make sure that the names match your security cards and the ID. Discuss the questions. Make sure you conduct an extensive interview. Collect all the necessary documents to ensure that the taxpayers who are self-employed are reporting all income, including cash payments received for work performed, as well as any expenses or loss that they have incurred. Make notes on all the intake forms. The due diligence. Paid preparers are required to exercise due diligence. That means that you're required to do your part when preparing a quality tax return to ensure that the information on the return is correct and complete. So generally what you do is you rely on good faith, on the information from the taxpayer. Because we're not the IRS, we're not going to require documentation as verification. However, part of the due diligence requires asking the taxpayer to clarify information that may appear to be inconsistent or incomplete. So if the taxpayer comes in and lies and you catch him, then it's your job to make him prove to you what's the lie and what's not the lie. You do need to see proof of taxpayers' cash contribution to a charity if you feel uncomfortable that the information is unusual or questionable. Remember, if you're not comfortable, you do not have to prepare the return. The purpose of the NTO review is to ensure that the taxpayer's return is accurate based on the intake interview sheet and the supporting documents provided by the taxpayer and the interview with the taxpayer. NTO will conduct a review of every return prepared. Having a second pair of eyes focused on the review offers the best opportunity to correct small errors before they cause big problems. So even if you have your own EFIN, you're able to have us review your returns. We have several EFIN holders that like us to go over the returns. And it's not that we're picking on you guys, and it's definitely not that we don't want to file these tax returns. Because if y'all aren't making money, we're not making money. So we want every return to go. We want every return to fund. So when the returns are failed, it's not because we're just doing it to be mean, to be nitpicky. We're doing it because we don't want you to file a return that you're not going to get paid for, that's not going to fund, that your customer's going to be mad at you because it didn't fund, what did you do wrong, or that's going to get rejected, or that's going to get flagged for an audit. We want quality returns every time. And if you follow this trading guide, you will have just that. So when you guys get this training, you'll be able to read through it in your own pace, and then you will have learned all of this stuff, that there's a direct correlation between the proper use of intake forms and the preparation of an accurate tax return, that the effective interview must be performed to verify tax information for each return. So does anybody have a question about any of that? Anybody? You guys are a quiet crowd tonight. Like, what are you guys doing? What's going on? Are you guys like just chilling? Nobody's got no questions? I'm doing that good of a job? I don't think so. Okay, so next thing we're going to go to is the learning module. This is what we were talking about at the beginning, that everybody wants us to tell them about, but nobody wants to pay for. So Dave has created this for you guys, so I'm going to let him talk to you about this for a second. Okay, everybody wake up, wake up, wake up, wake up, wake up. Here we go. Hold on. Here we go. Nancy Joe.
Okay, so hey guys, put together some training modules. Um, Basically, we took this information from IRS WIDA program. I don't know if you guys familiar with the WIDA program. It's for volunteer tax preparers. They usually have it in libraries. You could go get your tax returns prepared for free over there. And in order to take be a volunteer prepared, they do a thorough training. To You have to go through a thorough training with the IRS, and in order to train them, they put out some of the information. And so we took some of those information and put it together, a full module for you. So here's how it works. I'm not going to go through. There's like about 30 slides in here. So when we get through this, we'll send over this PDF. Where it says click here to begin the module, you simply click there, and what it's going to do is going to pull up a lesson for you, and then it's going to guide you through the full section for that specific thing. Um, it'll walk you through the full thing, including all the changes, basic filing statuses, personal exemption workout, dependent workouts, EITC, everything. So simply click here where it says to begin this module, and then this screen will come up, and you can simply walk through the full uh, training. Now, there are some question and answers as well, just like this. And then you can answer yes or no. I'm just going to pick something, and it's going to tell you if it's incorrect. And then if it's correct, it's going to tell you, and then why is it correct. So it's really helpful if you have preparers working under you that you want to train them. You can send them this and make sure that they're completing it. At the end of it, every lesson, once it's complete, it gives you a small thing where it says it's completed. You can have your preparers printed out to make sure that they actually did complete it um, as a proof. Now, one last thing I want to mention and talk about is the last slide on this thing on PDF is the paid preparer due diligence training. I highly recommend, and we always do every year, recommend all of our offices to do this. It helps understand you and your preparer can understand basic of what the EITC stands for and what are the due diligence requirement by the IRS. As you guys already know, since we went to um, standard deduction, more standard deduction tax returns are being filed rather than itemized deductions. So there are more IRS revenue auditors they don't have much work because everything's filed standard deduction. So if you file tax returns with Schedule C's or if you file tax return with Schedule A, they are their education credit as well. They're looking at it more thoroughly now. So preparer audit is also increased in last couple of years since last year also since the TCJA has been introduced. So go through this training, sign up for it, and it's gonna at the end of it, it's gonna print out a certificate for you guys. Whoever completes it, you got to plug in your PTIN number, and if you are in process of becoming an enrolled agent, or if